easiest way to allay that or to take care of that is that most of the time, if your rental properties or flips and such, most of the time that does not tie back.
Sometimes as investors, our goal is to figure out the risk we can take, because what we're doing is risky, but how much risk can we onboard and stay afloat long term? Because we all want to be in the game long term, and you take too much risk on, you're going to fizzle out. Welcome to the Cash Flow Bros podcast. Mickey, so grateful that you would take the time to connect and hang out with me.
So glad to be here. Thanks.
Yeah. So you actually are one of our sponsors, and we have a meetup every month. And you actually are one of the ones who partner with us to support the event. We have anywhere from 50 to 60, investors and like you guys, and come together, hang out. It's a great place to meet, other, like-minded individuals. And some of them actually have specific businesses that help the industry. And you and your wife's an agent, and then you also are in insurance. And so you are kind of our go-to guy to recommend to those who work with us on the sales side to, connect with and kind of get insurance. So I was like, man, it would be great to have you out here. That said, as we started to dive in, I was like, man, you have a breadth of knowledge that now I'm just like selfishly here to learn from you, because you have so much experience in the management side, such a depth of knowledge of various types of insurance and how insurance works. And I think a lot of people who are listening are wanting to know. It's a space that I think if you knew a little bit more, you could ask the right questions to get the type of coverage you need. But then just life experience, and you've seen a lot of stuff happen in the industry, in real estate, and seen those cycles, and so anyway, that was a really long intro, but I'm just stoked, and I'm very grateful that you would take the time to hang out with me. So
great. We always say if I can tell you everything that I've done wrong and messed up on, then maybe you can avoid that pothole when you're walking, right?
Right. I mean, that's the beauty of community, right? Is hopefully someone else has experienced it and can give you a shortcut to your investing experience or life. Sure. So give me a brief rundown of kind of history of how you got started in insurance, and a little bit of your journey and kind of where you are now.
Sure. A long time ago, I started. I was an underwriter for a life and health insurance company, major company, and part of my job was going out to agents' salespeople's offices, and teaching the staff people how to do the life and health insurance, because a lot of these folks, the agency owners, focused on auto and home and commercial, and they sort of left out the other ancillary products. And so that was my job to go out and say, hey, we still have these products.
We got other things.
Do you know where the applications are? That kind of thing, And it became relatively successful. And so we helped, after we helped a few people to achieve, their sales goals and be able to qualify to go to the conventions and such.
Yeah,
that they would
everybody wants to qualify to go to convention.
Oh, yeah.
Especially back then, they were ripping, right?
Yeah. These guys would go to Rome and Russia and just everywhere.
Epic. That's awesome. So you started kind of helping people out, and then from there you kind of started your own agency.
My job got transferred to Monroe, Louisiana.
Okay.
And the woman that I was married to at the time said, basically, hell no. Mm-hmm. I'm not going to Louisiana. And so I walked into an insurance agent's, a farmer's insurance agent's district office and said, hey, I think I want to be an agent.
Oh, okay.
Because I was referred by a State Farm agent that said, hey, Farmers has a great contract. You ought to look at them when you're looking around.
Right.
So I'd never been in sales before. Actually, no one in my family had ever been in sales or been an entrepreneur at all before. And so it was a little scary, for a guy from small town to move to Birmingham and do that. But I walked in and I said, hey, teach me about it. And so had a really good guy, really good mentor, taught me about it. I started selling farmers insurance products. That was 1996.
Yeah.
Did that for a number of years.
So I want to dive into that a little bit. tell me how important that mentor was for those beginning years, and confidence and learning the trades. Like, break that apart.
Absolutely, absolutely. I think there's a couple of different kinds of mentors. You have the technical mentor. You have the person that, okay, here's now that someone has pumped you up to tell you that you can do it and convinced you that you can do it.
Right.
Now here's how to do it.
Right.
And so there's a couple of different kinds. This guy was more the cheerleader, and that's what I needed at the time, was to tell me, hey, I can do this. I can do this. And so, and he ended up becoming more of a guy that would let me know, hey, here's how to do this. Let's try this. And
I love it.
I found out very quickly that I didn't care anything about cold calling. That was what seemed like my peers did. They would sit in the room and just go through the phone book. I mean, this was 90s, right?
Living the yellow pages, right.
And I said, I'm not going to do that. If I can help it, I'm not. And so I just started going out, making a list of people that I thought might be able to get in front of a lot of people, that if I could influence them to maybe believe in me and my business, then maybe they would tell other people. So that's when my partnership with realtors and mortgage professionals started, closing attorneys, small business owners, things like that. In the early days, one of my biggest referral partners was a hairdresser, was a beauty shop. Because I mean, they would get people in there and they would find out their life story, and they, something would come up along the way and said, "Hey, do you have insurance?" but a lot of what I did was partner with realtors and mortgage professionals in my sales career there.
So you started there, learned the skills of the trade, and honestly approached it from a very different angle than most people do, which is incredible. Yeah. And then where did your journey take you?
So I got married to another farmer's agent, Lynn, my wife, and she was offered an opportunity to be a district manager with farmers. And at the time, there were only about 15 other female district managers out of about 300 or 400.
Yeah,
and
good
so
for her.
It was a great opportunity. And so we ended up selling our combined agencies back to the company at the time. That was our only option.
Right.
You either pass it down to a family member or you take it back to a company.
Okay.
Now, at this point, you can actually sell it on the open market.
Okay.
But back then you couldn't. So we did that, and we went 13 years just building a territory. We had the central part of the state from Mississippi to Georgia. And so we developed agencies, we hired, we recruited, we trained. We were the the mental health professional for them, we helped train their staff. We were a lot of the motivating kind of mentor.
Right.
And so my wife is detail oriented, and I'm not as good on that side. I'm more of the cheerleader type. And so I was about the marketing and helping people get started in their office and figure out how they're going to get customers.
Right.
And then once they got them, my wife and her assistant were the ones that taught them what to do with them.
Yeah. So it's funny because you started the story and ultimately you're like, I don't know sales.
Yeah.
And you found out, you kind of fell into actually, I'm kind of a good salesman. Go figure.
I thought sales was, sitting at somebody's kitchen table and laying out a big presentation and knowing 100% about whatever question they might ask me. And so I found out later, it's okay to say, great question. I'm going to find the answer to that. Mm-hmm. And so I do that enough, and then now I already know the answers, right? And so I'm still, after a long time in the business, I'm still coming across things that I still need to look up, or I still need to call and ask advice. And so over the years, we've built a network of people that are in our company and outside our company and outside our industry even, that we can call and just say, hey, what do you think about this? I've got this issue. What do you think? Or I know somebody who needs to solve this problem. And if you've given enough, then you can get some of you can get back.
Yeah. Talk to me a little bit about, because I keep on hearing the strength of network. Like you
Yeah.
started even the pivot early on as a salesman, and you said, I'm not going to open up the yellow books. I'm going to network and go to people who can help me find clients. What are some of the lessons you've learned that has helped you build a great network? Like, what are some of the, the keys almost of like the tricks of the trade, or things that have really, because I'm sure you've tried a lot of different things over the years.
Sure.
But some have really hit harder than others and helped you really like add people to your Rolodex. And I asked that because I went to an event a little while ago last week, and Dan and Kathy was there. I think I actually mentioned it's really impacted me, and I'm really challenged by it. But he's like, your network is your net worth, which is a common saying. We know that. And he opens up his phone and he slides it over to the moderator, and it says, look how many contacts are there.
Yeah.
And it's 23,000. And I was like, wow. And then I looked at my contacts, and I don't want to say
less than 23,000.
Less than 23,000, we'll say. And I have a mastermind group. We did that, and it was even low in that group. And I was like, man, I've got to get. So this is a very selfish question. What are some of the things that help you add to those Rolodex contacts every day?
One thing, if I can find out what's important to somebody else, like when I was first brand new, handed a stack of applications and said, somebody said, go fill these out. I had no idea what to do. So I wanted to make it as brief and as succinct and as efficient as possible. And I was like, hey, I'm Mickey. I'd really love for you to help me with my business. Can you sit down and give me insurance?
Me.
Yeah. And I need this. This. Right.
Yeah.
And then you just have to turn that around. And so what I began to do was find out, what, like with the real estate and the lending side, those were my main referral sources. And even the small businesses, I tried to find out what would make a difference to them. How could I impact their business? What do they need? When they have an event, maybe I could sponsor. When they have when they have an open house, do they, what do they struggle with? What are the small things and what are the big things? And so,
you helped me. I mean, I had a property that was in a flood zone. And I reached out to you, not knowing, you never knew if you would get the end client. But I said, hey, can you give me a ballpark of what flood insurance is going to be on this property? So that, because I keep on getting inquiries about this property for purchase.
Right.
And people are like, oh, but it needs flood insurance. How much is that? And I was like, I don't know. and I would always refer you to the next person saying, hey, this is the guy who gave me the quote. And I don't even know if that ended up pinning out for business for you. But like, you did that out of such selflessness and solving a problem for someone else. Like you solved the problem for me. Because then I could say, I think we found a number. And then every time I'd say, hey, I got a quote from this guy for this amount. It's a ballpark.
Right.
Go run your numbers.
Right. Right.
And that was so helpful because it was one of the biggest hiccups on that property.
Right.
And you didn't approach it from a standpoint of like me. You just said, how can I make your job easier? And you made it 10 times easier. And so thank you for that, by the way.
Well, sure. You're welcome. And I appreciate you saying that. But a lot of our work is I'm going to do something today and it might take me half a day and I may not get paid for it ever.
Yeah.
Or I might get paid for it over and over for the rest of my life, beginning next year.
Yeah.
And it, regardless, you've done the right thing. You've planted some seeds, and a lot of times the scariest part. There's one little aspect of especially for a real estate investor or their buyer client. There's one little aspect of the sale or of the transaction that is scary to them.
Yeah.
And whether they verbalize that or not, once they say, hey, I'm worried about this, I'm worried about flood insurance. I'm worried about, taxes, I'm worried about whatever, then we put, if we can lessen that and if we can help our referral partner, then we're ultimately getting a client and being able to help them. If our referral partners see how we treat them, then they're going to know that we're going to treat their client pretty much the same way.
It's an interesting thing of the business you're in because you're alleviating people's worries. They have this plethora of like what could, and I think back to my wife is a 6,
Right.
And I don't know if you know Enneagram stuff,
Yeah.
and now
Right.
we're deep diving into
Yeah.
totally different things.
Totally different. Yeah.
But that profile basically says like what is the worst case scenario, and I appreciate her so much because we just recently went to Disney, and she sits down and thinks about all the things that we need to pack
Right.
for this trip, and I don't have to think about it, and that's the strength of her personality. Now the flip side of it is, at times she'll say, "Oh, we're going to go to this situation, and what if this happens, or what if this happens, or what if this happens?" And I have to say, "Hey, it's probably going to turn out okay.
Yeah.
Let's alleviate some of those
Right.
things with some planning, but then we also have to just go and have fun." And I'm sure for a lot of people, that's what you're doing is like, but what if, what if? And you say,
Right.
well, that's what insurance is for, and this is how it covers you.
Right.
And you're really walking them through an emotional journey than like actual financial like transaction.
Right.
Like-
Usually the actual page that they sign for the insurance is the least scary part of it for them. It's getting to that.
Yeah.
It's getting to that. And whether it's, home or auto or business or life insurance, it's just whether or not they believe that we're going to be able to solve their problem.
Yeah.
And that's kind of what we specialize in is the customer service end of it. We do a lot of work to refer things off to another, to our competition,
Yeah.
and not get paid for it. And we decided a long time ago that's the way we're going to do it. If we can't provide them a good solution, then we're not just going to say, "I can't help you."
Right.
Sorry, call back next
Yeah.
year. It's just a little extra effort to say, let me give this guy a call. Let me give this lady a call. Let me talk to her and see.
That's
I'm
awesome.
pretty sure they can do this. And maybe we call it rehabbing clients. We help somebody get if they're not a preferred risk to us. We help somebody go somewhere else
Where it
sometimes
works
for a
for them.
while, and it works great. It's affordable, and they have the coverage they need. And then sometimes we can bring those people back once they have qualified to be with us. Over the years, we've gotten more and more. We're not just a preferred, AAA client company. We have a lot of different options now. But at first it was,
there's some strict guidelines that you had to
at first
never be in a wreck for 20 years. Then we'll take you on.
Exactly. If you could promise us you won't file a claim, we'll be in good shape, But
you don't want me then. I'm out, unfortunately. But that is an interesting thing of like you said, it's finding the solution. I think there's a lot of trust that you build with your clients, and to know that like if I refer you and they start working with you, you're going to find them the best solution, whether that's doing business with you or someone else. You're in an industry to help serve people, and that may be providing them with some product that you can provide.
Yeah.
But it also may just be saying, "Hey, go talk to this guy
Right.
or this gal." And I think that's like such a great way to approach business, and it builds so much trust, because then you're not an all-in-one solution, but you're a trusted resource to be a solution for some things, and other things you outsource. Because I know you do investment properties.
Right.
I know you insure Airbnbs.
Right.
But you probably don't take on every investment property. You probably don't take on every home because it doesn't fit, like you said, the profile and all that. So man, that's incredible. I want to circle back a little bit on the management. So I don't want to get too far away from that.
Yes, all right.
Talk me through a little bit of, just give me a snippet of a lesson or two that you've learned through that process.
So number one, and this may not work for everyone, but for me, I hire people that are not my clone.
That's good.
Because, you know, I like to say I'm a visionary, but my wife calls it a dreamer, right? You know, and so
some would call it crazy some days.
Right? Yeah,
we're not sure, but
yeah, I have a lot of ideas bouncing around in my head, you know, and but I have to surround myself with a team of people, my wife included, who are detail oriented, who can take what I'm, and who can talk straight with me as well.
Yeah.
You know, I tend to hire people that are going to stay with me a while. Try to treat them right. You know, and so we're a family. And
that's great.
My office manager has been with me. And off and on, we've had a working relationship for 30 years.
Wow.
She started with me in that first job I was telling you about, where I was a health insurance underwriter.
She probably can predict what you say before you say it.
Exactly.
That's amazing.
Yeah, I can scribble something on a Pop-Tart box at midnight, you know, and hand it to her, and she'll go, "Okay, I'll run this quote," you know. But we've been together forever. But if I have all these ideas, you know, once they boil down, probably over half of them are not good ideas.
Right.
And the ones that are, I need somebody to take the ball and go with it, right?
Yeah,
you know, and run with it. So I surround myself with people that are not necessarily just like me, and who have other skills, right? And so that's the one thing I can probably say that's in the early days, I paid my staff person when I couldn't pay myself.
Yeah.
You know, I just felt like you've got to be able to build that family. You got to be, you know, and some people call it building an army, right? Of people that are going to be your supporters.
Yeah.
But
tell me this, is there tension in the relationship because of that difference? Or maybe tension's not the right word, but there's conflict's not the right word, but there's a little bit of friction because they're probably trying to keep you in a lane to, hey, did you follow up with this person?
Yeah.
You're over here like thinking like, I'm creative. I'm like, 50 ideas. And they're like, well, let's just do this one idea. And you're like,
we try one at a time, you know, you know, and my wife, I've heard her say, you know, how about no more ideas for today? You know, you know, I mean, she's fantastic and she grounds me, but she's black and white, right?
Yeah.
You know, and I am pretty out there, you know, and if I was left up to my own devices and I was doing it all myself, I would not be effective because I wouldn't finish anything.
Right.
And so I'm pretty good about delegating to somebody that on my team that I know is going to be able to handle that. And we have a pretty good behind the scenes follow up program to where I know what's going on.
Right.
And I may not do all the quotes, or many, or all, or any.
Right.
But I know what's going on with each client, with each prospect, and I also know that I've done my triage with them to put them with the right personality and the right skill set.
Right.
Staff person.
That's great.
Yeah.
Yeah. That's so good. Just hiring from someone, and there ends up being a little bit of a tension. I've found that, when I was doing a lot of graphic design work and we had project managers, the ones that were best for me were the ones that I got frustrated with sometimes because they'd be like, get back on task, you know? And, but that's what I needed, you know? So, okay. So I want to branch into a little bit of the technical side of insurance. And this is going to, I think, be helpful to a lot of our listeners and myself. Like I said, I really approach these selfishly because I have these questions. So I want to talk about insurance and how it works. Kind of bigger picture. If you have multiple properties, I want to talk about just kind of global insurance and your ability to be insured. So
Sure.
if you have multiple properties and you make a claim, okay, on your personal, let's just start with that first question. So I have rentals, and then I also have personal property.
Right.
And how does that work as far as how the insurance companies see me if all these properties, there's going to be claims that come in, sometimes not. My deductible's at a point where there's a lot of stuff that comes in that ultimately I just pay out of pocket because
Right.
it does not make sense. The
Right.
differential
Right.
per the claim is like
Right.
no brainer. Just pay out of pocket, take your lashings. I mean, I had a tree fall last year, and I'm writing a big $6,000 check, and I'm just writing it because my deductible is so high that I would barely cover. I would barely versus the claim, so I just cover it. So I understand that to a degree, but is that isolated from my personal claims? So if I have an injury or a accident on a vehicle or something like that, and I make a claim over here, how does that affect all of this? Because now my insurance and the amount of money I'm paying across these broad insurance claims is a lot higher than just a car and a house.
Right.
Which, a lot of people have just a few houses or a few cars.
Right.
But now I've got like multiple properties more.
Right.
So how does that work?
All right. So very good question. So in the old days, when I would work with an investor, like I right now have an investor who has 100 mobile homes.
Okay.
Well,
just a few.
Yeah. And their family has half that many. Their family member has half that many that I've take care of. Well, at first, when we were dealing with this person, they had them all in their personal name.
Right.
And in that respect, sometimes you can run into a claim situation where they're sort of going to spread the risk or the analysis of it. Like a company's going to look at it and go, okay, yeah, they've got 4 claims, but they also have 10 properties. They don't just have one house with us.
Right.
And so that does work. But I think the easiest way to allay that or to take care of that is that most of the time, if your rental properties or flips and such are in an LLC or a corporation name, most of the time that does not tie back to the personal.
Okay.
And so we rarely have a problem anymore with too many claims for investors.
Okay.
I mean, I've worked with investors that have a different LLC for every property.
Right.
That doesn't always.
I call that a nightmare.
Yeah.
Just
I mean, and I would much rather it not be like that as well. But the point is they do separate that from their personal.
Right.
And so I might not be speaking for the whole industry when I say this, but for the companies and carriers that I deal with, I think separating your losses, separating your properties between personal and corporate name is the way to go.
Yeah.
There's probably a lot of other advantages to that as well.
So, I agree with you. So, if you were to basically, they are separate. Now claims within the entity of, we'll say, this property group, they do affect that property group still, but they'll keep it, and vice versa. If you keep wrecking your personal car, then it will not carry over and say, oh, well, property group X needs more insurance because Todd just keeps wrecking his personal car. I just may be reckless in a car, not with my rental property.
Right. You can be very, very safe with your rentals and then text and drive all of it.
Yeah, it's hard when I take that Ferrari out and the insurance is just killing me.
That's right.
I don't own a Ferrari, by the
way. The interesting part is that you mentioned before about having higher deductibles. And self-insuring for some of the at least minor damages. We even, our average personal homeowners and probably investment home deductible right now is about $2,500.
That's what I was gonna. Okay,
Yeah, it's about $2,500, and that's ticking up. That's ticking up. So where some of the carriers that are out there, my main preferred carrier, Farmers, we don't have a percent deductible yet that's mandatory,
Right.
but most of our competitors do. In other words, they're going to have a 1 or 2% total deductible or a percent deductible on wind and hail, especially.
Right.
At least.
Is there a sweet spot for the discount to the deductible price point?
Per company, yes,
Okay.
there is. And so what you
I just send me that list.
Yeah.
Break down every single insurance company.
Yeah, absolutely. We'll be handling that this week.
Yeah.
One thing to do when you're shopping for insurance and when you're talking with your agent is to ask that, hey, if I were to go up to $5,000 or if I were to go up to a 2 or 3% deductible, how much does that save me? And this sounds like real salesy, but if you bundle your business with one carrier, you're usually able to keep your costs down.
Yeah.
Because you're going to get discount. You're going to get cross discounts on everything.
Correct.
And so, I have a client who's they're a realtor, and I've just talked with them this morning. That's why it comes to mind. But they're a realtor. Well, they've never had their autos with me. I have home. I have investment properties.
Come on, guys.
and I said, and so they called over the weekend and said, hey, do I have an umbrella? And I said, well, remember, I can't do your personal umbrella without at least one vehicle, in the category she's in.
Situation. Yeah.
And I said, so I can do that with an outside carrier, or why don't we just get one car insured? You've known me for 20 years.
Yeah.
And so
It's
that's what we're doing. That's what we're doing. And so, and then there's all kind of commercial umbrellas that you can get as well on top of that.
Right.
But the biggest part is how much of your how much of a potential claim can you eat, and to have the ability to not have a career-ending liability loss. Or personal.
I mean, that's
loss.
the way I think about it when I get insurance. Is like I'm looking for what's the highest risk I can take, and above that, I'm looking to kind of insure. Burn, like it basically burned down, type thing. I feel like most systems of houses can be fixed for around 5 to 10, depending on how severe. And so you just have to figure out your liability in that. It's interesting. I actually, I've worked with a fund, and their insurance is so high that is effectively 100% what they're insuring against is only the fact that it would get burned down.
Right.
Like it is, I think it was $100,000 was their deductible per property.
Right.
So it's either we're fixing it all, but they have that spread and they have that coverage. So they're basically self-insuring with a larger thing that or a good example someone mentioned was like, well, what if you had 7, 8 properties in the same area?
Yeah.
And a tornado comes through, and 6 of them get hit. Well, that would completely take you out if you weren't properly insured.
Exactly.
And so in that situation, you at least, even if you're self-insuring and you want to push that margin, we'll say $10,000, which, maybe your risk tolerance / how much liquidity you have, you still got to have something because there's no way you could survive 6 houses going, down to the ground.
Right.
There's just,
Yeah. And being physically smart with your money that you're saving, by having a higher deductible or for offsetting your deductible, putting some money aside in a fund like that, because that's I kind of believe that's the way of the future. I think that companies are going to begin to not cover full replacement on roofs.
Yeah.
I believe that's coming to Alabama. I believe that's coming to the South at least.
You heard it here first.
I'm not a, who am I? I'm a little insurance agent, in Birmingham, but I think
2025, it happens and everybody's like, Mickey was right.
Was there. I think it's there because that's a big deal because, that's one of the things that is a big disparity, has a big disparity in between carriers now. My competition and our companies pay roof claims differently. It seems to be more of a disparity there, right?
Okay.
And it's a big deal if somebody has 3 or 4 shingles blown off and then we put a new roof on.
Yeah.
That's a roof in Alabama is how much? You're a contractor.
20
grand?
Yeah, it depends on the size of the house, but you can get it probably on the low end of a 3.1. You're spending 8.
Yeah.
But if you have a nice 4.3 in Pelham or with the steep incline roofs,
right. Yeah.
You're up to 15, 20,
So we're, I believe that's going to happen. I also believe that while we're in the future here, I think that in the future that we won't run a driving record. We'll give you a little thing like in our commercial or the
They're
Progressive
start
commercial.
Us.
And we're going to track you daily on how you're doing now, not how you did in the past.
I've had conversations with my brother. He's very much into the EV world and all that kind of self-driving and everything. And his take, and I don't disagree with it, I think we are far off from it. But the concept that it is going to be so expensive for you to drive your own car, you eventually will not.
Yeah.
And like I said, I think that is a very far in the future thing, maybe closer than I think. But the technology for self-driving is going to progress to the point where it's much safer to you effectively ask for an Uber. The Uber will have no driver, and there'll just be a bunch of self-driving cars that come pick you up, take you to their destination, drop you off, pick someone else up, and it's gonna be a whole grid. Now, that is a very, I know I'm talking about like space type stuff. That's pretty far out there, but it will be very expensive. The government will just make it so expensive / insurance will be so expensive because the safety will be there in the numbers will show that it's safer for self-driving vehicles eventually. Right now, it's a trust thing. Because you see the 1% of the fluke that messes up, and then you're like, oh, and we don't feel like we have control. When really, at the end of the day, if you gave over to the system completely, the death rates would go down. Right. It's just fact. But no one wants to feel out of control. So now we're digressing into human consciousness. I told you this podcast, we go lots of different places.
That's fun.
Okay, so this is super helpful, and I'm learning, and I hope, I'm going to put this as like an episode that everybody should be listening to because it's just lots of information. How do I make myself, if not be like appear low risk or be low risk? Maybe I shouldn't appear low risk. What are some of the things that are tick boxes that I should be aware of that say when I go to get insurance, I did XYZ over this year and it helped me stay low? Or some of the things I did not do or did do that it's like, ooh, red flag, probably shouldn't have done this.
Yeah. Great question. Of course, I'm a little biased, but I would say have an agent. Yeah. Number one, there's a lot of companies out there that operate without agents, and some of them are great, right? But when I call that company and ask about my account, I can't speak to Lori or Bob or somebody who's known me. They pull up my account and they may or may not have a history with me.
Right.
I would say, of course, their best move is to call me. You're right. But
You're like, if you want to be honest.
No, but have an agent. And I'll just hopefully say a local agent. Somebody whose job is to take care of you, right? And then to give you good advice, and then somebody who on the other side of that can be held accountable. If I give you bad advice or if I'm not taking care of you, then you can give me a call and we can get something, you
Right.
know, resolved. But when you're dealing with a huge corporation, when you have a problem,
It's
you
a
know,
little tougher
it's
to
a little
walk
harder,
through.
right?
Or
And
like,
so-
hey, if I bought this
Yeah.
car versus this car,
Right, yeah.
what are we looking at as far as insurance?
Yeah.
And you can say, well, honestly, viewing your profile, I would suggest this if
Right.
you're really concerned, because
Yeah.
that's a huge jump.
Yeah.
Because I mean, you think about a car payment, but then there's also insuring that car, and you know, if one car is a lower payment, but you end up insuring it for $100 more, you're almost
Right.
at a wash.
That's right.
You know, and you're like,
That's right.
So you could be making a decision, a financial decision, without even thinking about that extra layer.
Good point. And so brings us to the second point is, first of all, have an agent. Second of all, sit down and talk to them,
Yeah.
you know, and, you know, we offer what's called a farmer's friendly review, but we offer a policy review.
Sounds fantastic.
Once a year.
Way better
You know,
than a unfriendly review.
Yeah.
So just
Yeah,
you're heading in the right
we
direction.
used to do farmers, grouchy, mean review, but
Yeah,
it just
yeah.
didn't go over.
It didn't seem
I don't
very
know.
well.
There was a disconnect there.
That marketing campaign flopped.
I saw on a show I was watching where in Japan they have restaurants opening up that are rude, right?
Oh.
And that's their kitsch, right? That's
Yeah.
because they're so polite there, and they're so customer service is so over the top.
It's very formal
yeah.
society.
And so when they go to this place, that I think the restaurant was actually called Rude, right? And so
That's
when they go to
funny.
this place, you know, somebody's throwing their menu at them, or calling them fat, or just
It's like, hurry up and order.
yeah, and they loved it. You know,
Yeah,
they loved
yeah.
it. But anyway, but sit down with your agent and just go over stuff. People think when I offer them a review, they think, oh, he's trying to sell me something else. You know,
Yeah,
oh my
yeah.
gosh. Well, a lot of times, actually, we end up not only not selling you something else,
Right.
or helping you buy something else, but also we find there's some gaps or some overlaps where maybe you don't need some of the coverage you already have.
Yeah.
You know, so but take advantage of any opportunity to review stuff with your agent. I mean, I would say at least once a year, just take 30 minutes and sit down with them.
Yeah.
Go to lunch or go to their office or just at least talk on the phone with them.
That's so good.
And as far as making yourself more marketable, presentable, a better risk for insurance, take what you've already mentioned today. Take as much of the risk as you possibly can.
Yeah.
I would say, as cost wise, try to get as much of your commercial lines with one agent or agency, as much of your personal lines with one agent. You know, bundle that.
Right.
Because it really is a thing. It really does save you money, and not only that, the person who's handling your insurance on the back end realizes the ins and outs of what's going on in your business, because you're calling them and you're talking with them,
Right.
And it's not. I'm not having to wonder whether or not they have this covered somewhere else.
Right.
You know, for instance, on the insurance insuring investment and remodelers kind of
Correct.
Policy. So
You're talking about like during flips.
yeah,
like
during flips,
So
right.
so a lot of people don't know, and I want to clarify.
Yeah.
When you insure property, there's actually different insurance you need, and you need to clarify with your insurance that you are actually renovating the property.
Right.
Or else, if they say you like just get traditional, hey, I bought a house, it's a rental, it's an investment property, and you don't inform them that you're in the rehabbing process, you won't be insured.
Right.
Because so there's difference of that even coverage. So that's kind of what you're diving into, right?
Very good point. So let your agent or agency know what's happening, because
Right.
if they don't ask the right questions, you speak up.
Right.
You know, and usually somebody with any experience is going to ask the kind of questions.
Right.
Are you renovating it? What's the exterior look like? You know, how much, you know, what's going to happen afterwards after you renovate it? Are you going to rent it out, or are you going to flip it and sell it? You know, in the meantime, is it vacant? Is it, you know, and you're going to, you know, how much structural stuff are we going to do to the house? And
Right.
so if you, and I may not need to know that all that information on every single one, but on the ones that you're remodeling, I need to know that because, first of all, I want to make sure that I have it insured correctly. So when you have a claim, if your wiring gets stolen out of a vacant house,
Right.
Or something like that, then I want to make sure that you have the opportunity to have that covered. And the other side of that is, do we need to offer liability for this project, or do you have that covered on like a master policy?
Right.
I'd say that's about 50-50 in the people that I deal with. Some of them have the larger agents, the larger investors. They usually have some sort of liability, like a blanket liability policy that they say, hey, like you said, all my properties are covered, even additional new properties before I even report them. They're covered up to a certain amount. So I don't need the liability on this. I need you to make sure this property is covered.
Right.
And so with a regular homeowners or anything like that, you're not going to be able to really exclude the liability like that, but that's an additional charge, and everything's about the bottom line, right? What's worth it? If you had an unlimited budget, then I could give you the perfect policy that
you can insure my hand,
right? Exactly.
Because or my voice or whatever. Like at the end of the day, you can insure anything for the right money.
Yeah.
Going back to that, so if you do not give the proper information, and I'm not saying you're trying to lie, but maybe you don't disclose something or you have some misinformation wrong, can that be used sometimes to deny a claim? Or maybe some companies who are less reputable will use that as leverage to basically say, nope. Like, for example, you buy property, didn't inform that you're flipping it. You are flipping it. You just have regular just investment insurance on it. They show up, say it burns down, and be like, well, you were clearly renovating it. That's why this electrical fire was caused.
Right.
You're SOL.
Right.
Then that's possible, A, correct? And then B, does it happen often?
Yeah. It doesn't happen a lot, but and with our agency, it doesn't happen a lot. We're not infallible, right? We're probably going to make a mistake and not ask the right question at some point, but we've been doing it 25 years.
Right.
And so but to answer your question, the company has an opportunity at that point to make a decision about that claim. Mm-hmm. Am I going to pay this claim or not?
Right.
Or after I pay this claim, do I ever want you again?
Right.
Am I going to non-renew your policy and not ever accept anything else?
You'll
again?
be blacklisted.
Right. And that does happen.
Yeah.
That does happen.
Yeah. Which, by the way, look at my name, see if I'm blacklisted on any.
I think you're okay so far.
That's good information to know. I hadn't thought about the fact of like, we'll pay out this claim now because it's borderline fringe or whatever. We don't want a bad rep for this. But at the end of the day, you may make yourself uninsurable, or you may put yourself in a higher price bracket, or different things like that. So that's really information. You we talked about this earlier. You had a claim that was pretty significant with a restaurant. And I want to just kind of dive into that story a little bit and talk about how you took care of that client and just kind of the benefit that you brought to the table, being that call versus, like you said, a company or, So talk me through what kind of happened. That was a really interesting story.
So we have a client. So it's a current client now that owns some local businesses. We also have their home, their autos, their
they actually let you have the cars.
Right. Yeah.
They're a little more favored than this other client. Yeah. We're not saying names, but
everybody, that's true. Everybody, I mean, sometimes I have a portion of their business and I'm glad to have it, but I'm going to keep asking for the rest, right?
Yeah, 100%.
But on this particular one, basically we go way back and my staff goes way back with them. And so they're almost like family. And, they've been working with us and trusting us for their account for a long time. So this particular one, they sat down with us and said, "Hey, we're opening a restaurant,
Yeah.
and here's the things we need." And so we offered a very good policy. Our farmers insurance policy for restaurants is really hard to beat. I mean,
Right.
it really is. The coverages are pretty amazing. And so we offered our kind of our premier package for that. And that person accepted that. We went on, some time went by, and they actually had an electrical issue with a piece of equipment. It wasn't even cooking equipment that was in the property, and they had basically a total fire one night.
Wow.
And this was a small restaurant, a small business, but by the time because they had good coverage, we were able to first of all, we were able to keep their overhead. We were able to make sure that their employees were paid and their vendors were paid and their obligations and contracts were paid while our renovation of the property was going on, while the place was still smoking. They still have bills to pay.
Yeah.
And so we're able to replace everything in the restaurant. We're able to give them, to help them get a lease on a new place. We're able to keep their employees and all their benefits taken care of in the meantime, so they don't lose them.
Right.
At this day and time, I mean, your employees they're like gold,
Yeah.
right? So you got to treat them like that, or they're gone. And we're able to take care of, like I said, all their business overhead. We're able to take care of, restock everything, do their opening, branding, advertising and stuff for them.
Yeah.
We basically pay for everything. This small restaurant turned into $1 million claim.
Wow.
And that person, of course, is right now a customer for life, because they really didn't expect that all that was covered.
That's
and they
amazing.
basically hit all the buttons on the coverage. We paid for
go.
everything.
Yeah.
And so, but the point is, you can get less expensive. Usually, no matter who you get a quote with, you could get something less expensive.
Yeah.
But when you have a claim, you want to make sure that you at least realize you've at least had the opportunity to get a really amazing policy.
Yeah.
And so you might choose, instead of incredible policy, you might choose pretty
Mid-grade.
good policy.
Yeah.
But a lot of people, and a lot of people in the investment world, they'll choose the get me by policy.
Right.
And the get me by and help me, give me something that says insurance on it, And so we have to have a talk at that point that, look, we have various levels of coverage.
Right.
But I want to make sure that they understand what they have.
Right.
And so,
and that's very hard to do over the phone.
It really is.
And it, in the entrepreneur space, there's a lot. There's a book called Who Not How.
Yeah.
And that's a very well-known book, and we talk about a lot in my mastermind as well. And it really comes down to the who, and you are a who for a lot of people, and helping them walk through those specific situations. And even the same thing as like a CPA, like I have a hired CPA. As my taxes get more complicated, I had to hire it out. And now we have conversations. It's not just like, here, do my taxes. It's like, well, this is this and this. And he's like, well, maybe you pivot here, maybe you do this, and this is your options. And the same thing is true, I think, with insurance. Is like, I think about this restaurant scenario in the context of me, like if I was this restaurant owner, right? Like the marketing side, there's certain things that I know I could do in-house for really cheap, or personally, or whatever. Like I have skill sets.
Right.
So I probably wouldn't insure that part of the business.
Yeah.
but there's other aspects of the business that I can't do or don't have the time to do. So I'd be like, yeah, I'm not going to sit and rebuild a thing, or I'm not going to sit and repay all these employees because I can't rehire and spend the hours that I spent training these employees. So I'm going to insure for their salaries. I'm going to click that box.
Yeah.
And going back to the point of like who, not how, you are one of the who's that can say, hey, what boxes are you selecting? Just so that we're all on the same page, that I'm providing you the worst case scenario, the coverage that's going to help you stay afloat and keep you. I think sometimes as investors, our goal is to figure out the risk we can take, because what we're doing is risky. There's no doubt about it.
Right.
But how much risk can we onboard and stay afloat long term? Because we all want to be in the game long term, and you take too much risk on, you're gonna fizzle out.
Right.
And insurance is one of those things that if we can understand it and have the right who to help us understand it, we can have, barring the worst case scenario, we can still stay in the game long term.
Absolutely.
So,
sure.
That's incredible. With this, I always like to center back to local knowledge. And so want to kind of break apart Birmingham. Are there specifics to Birmingham as far as from insurance policies, from maybe areas that are harder to insure versus like, is it sectioned off, like the zip code matters, or does zip code not matter at all? Like, as an investor here in Birmingham, what is the specific to our market knowledge that I need to know when I go look for insurance?
Very good point. So, and it's pretty timely as well, because some of the carriers, not just that are owned or affiliated by my company, but others as well, have lessened their exposure in Jefferson County.
Okay.
And that's basically because of their history, their profit history in that area. And so Jefferson County is pretty wide, right? You got Mountain Brook to, everything else, right? Yeah. And so when you put I
like to say Homewood and everything else, that puts Homewood at the top. But
you got Homewood.
That's where I live.
You got Vestavia. I mean, you got everything, right? But you also have some areas that are lower income, that are low, maybe higher crime,
right.
And a lot of especially the independent agents, they'll have a crime score that pops up on their quote, and if that zip code has a crime score of this amount,
right,
then they're not able to offer coverage in that particular company.
Okay,
and it could also be crime score versus coupled with age of house and such as that.
It's this stew of different scenarios that say go or no go or go, but the premium's up here. Right.
People ask us, do we base everything on credit? And I say yes and no. I mean, credit, with most of the companies that we deal with, credit is a factor.
Right.
But it is an insurance score model that has about hundreds of different ingredients in that recipe. It's not just what your credit score is.
It's such a blank. It's a part of the puzzle, but it doesn't. It says part of who you are as a as a credited person, but it doesn't.
Right.
Yeah.
But I think to expand on that about what Birmingham has, if you're an investor that's looking to invest in Birmingham, first of all, there's just some great bargains, I think, to be had in the Birmingham area. And then there's some great homes. There are great homes in older sections, and there's some great homes in the newer sections as well. But you also have in Alabama, and you have a lot of weather issues
and trees.
Yes. So you have trees. The same person I was talking about, my friend who's my client who had the $1 million claim, they also had a tree through their house that year. Or actually it the edge of their house and landed on their car.
Right.
Called me and said, "Here's my car," and you couldn't see it. It was just a tree. But so you have trees, you have hail damage. You could have a 10-minute hailstorm or a 5-minute hailstorm, and it does as much damage, money wise as a tornado.
Yeah.
And then we move to tornadoes and high winds.
Yeah.
South Alabama, you have hurricane potential. You have coastal exposures. We have fewer choices now when we're doing a coastal property than we used to.
Because of history and stuff.
Yeah.
So obviously the lay of the land is affecting it. Like you said, crime is a part of the quote, and that gets into consideration, as well as now when you said the coverage exposure, does that just mean premiums go up, or they require a higher deductible, or is it a combination of those two, or are there other factors that I'm not even aware of as I ask this question?
Good point. And I hadn't laid this out prior to coming here, but like when a company experiences a higher than expected loss ratio in a certain area or on a certain type of property, they basically have a couple of different choices. They can quit doing business in that area for a while.
It goes on the blacklist.
And that has happened right now with several carriers, and you're probably hearing about that because some of them are the ones that a lot of you guys use, and so we've had to maneuver around a little bit. So we could stop doing business there. We could tighten up our underwriting. And that a lot of times is what happens is, okay, we're only going to do a house that's this many years old or has a newer roof or maybe we won't allow as many claims. You were going back to that earlier, won't allow as many claims in their history, in that person or corporation's history. Or even, it could be we won't allow as many claims on the property itself.
Right.
Forever in my business, I thought, when a claim popped up and it was, that was on the prior owner. That has nothing to do with, my customer. Well, these days, depending on what claim it is, what if it's a water claim? How do you know that water claim was taken care of properly by the prior owner, and maybe there's mold, right?
Gotcha.
So we could stop doing business. We could restrict underwriting. We could also require multiple lines of business. We could require that you throw in something that we sell that we make money on, because it's not homeowners in Alabama, like maybe, another line of business. But the fourth thing that we could do is go up on the premium. And so all companies have gone up. I mean, let's just face it. It's you go to Publix or anywhere, everything's gone up. And so what we try to do is manage what people are getting, and we kind of have to do some education sometimes about deductible choices, the self-retention.
It's an interesting thing because going back just economics right now, everybody's getting pressed. I have rentals that are doing fairly well and actually increase in prices, but because of that pressing, some rentals I'm having to not, in theory, the economics would say I could raise the rent, but everything's getting, and so stuff's not sometimes renting because people are retracting a little bit. Well, if I can't rent for X amount of dollars, I'll just live with my friends or my family or whatever. And so you have to I've had to drop rentals on a few prices on rentals to get them rented. But then that hurts my bottom line. Yeah. And I'm thinking, okay, where can I find some margin? Oh, I'll just maybe adjust my insurance.
Sure.
Because insurance just went up on me. So I've got to pay the same amount because I underwrote it at $100, but now it's $120.
Right.
It's cutting into my profit that I still don't have. So it is and we both know the market in the last 3 years has been just moving so rapidly up and down. Trying to pin it, put a pin in it is like impossible. And it's just one of those things that goes back to the who, have the conversations and say, okay, maybe we can get you to 110, but you're going to be giving up X.
Right.
Are you okay with that risk?
Right.
And I think the biggest thing, like I said, as an investor myself, I ask myself so many times, what is the worst case scenario and can I survive it? And if the answer is then yes, then I move forward. And if the answer is no, then I figure out a different pathway or an offset of risk or whatever that is.
Sure.
So including with insurance,
Sure.
I set my deductible at the hit that I know that I can take out of my bank account.
Right.
Can I take 10 of those a year? Probably not.
Yeah.
But I can take a few.
Yeah.
And so I set my minimum on what that few hits I can take. I can take about 4 of those.
Right. Right. Well, we started this conversation about how, what's the nature of insurance? What's insurance about, right? It's the law of large numbers.
Yeah.
Right. So if you have 20 properties or 200 properties, the chance of all of them or a great number of them having a claim at the same time is probably pretty small.
Right.
But if you have one property or maybe a primary home and one rental, then chances are higher that you may have to experience a claim at some point.
Right.
Because and that's the thing. Most companies right now, they realize if a client has multiple properties and they have a couple of claims, we would worry about the frequency of the claim.
Yeah.
Right.
Claims are going to happen.
Yeah, claims are going to happen.
Yeah.
But on homeowners, we would almost rather pay a bigger loss than several small, nuisance losses, right?
Right, because then it sends a mindset of I need to claim that on insurance. Right. Yeah. And that's typically what I do. Like if it's a big thing, I'm claiming, but if not, I'm self-insuring my own personal home.
Right.
No, that's very interesting. So one of my last questions that I really wanted to dive into, and I'm just like rapid firing, and you're just rocking it. So I appreciate the portfolio. I bought a portfolio. And I was introduced to the concept of a portfolio insurance policy. And what I found was interesting was I could not take all of my properties into that coverage. And the single family homes that were over valuation of 120, it made more sense to put them in single coverage policies.
Individual policies.
But everything below that, the numbers flip-flopped. It was like this inverse cross curve.
Right.
And it started to make sense to have those in the portfolio. So talk me through why that is potentially when you suggest clients take on a portfolio coverage. Do you offer that? Just kind of talk through those differences, because leading up to it, when I only had a few properties, I didn't even know that was an option.
Right.
Until, obviously bought the portfolio and was like, oh, you got more than 10, you can qualify for these different insurance options. I think 10 is typically what I've heard, but maybe it's lower now or it's changed. Right.
So we don't offer a portfolio insurance policy that's going to be, hey, 10 or more properties is going to be this amount, and here's the criteria that you have to put them in there.
Yeah.
I know that that's out there, and I think it's probably a good thing for investors because, like you said, they're usually the smaller dwelling amounts, right? They're usually the smaller risk, and so if my memory serves me correctly, and then so maybe it does make sense for that because what we're basically doing at that point is you're self-insuring a bit of or a bit more of the risk, right? And so you're retaining some of that risk, and so the company that's providing that insurance policy says, "Hey, look, I do well in this arena, which is this age house, this valuation house, and this zip code. Any of those, I'll take." Right. It's like these companies that come in with. It's a little bit like these companies that come in with offers, right?
funds.
Million,
They've got a criteria,
right.
and they say if it's in my buy box, I'm buying. If it hits these numbers, we pull the trigger. Exactly.
My wife had one just this weekend. It's the house is off to itself out in the country, and that person wanted a cash offer, and there's nothing to really compare that to. But if it were in a subdivision, these companies, these funds would come in and in a minute they'd have an offer in their mailbox every day, right?
Exactly.
Because they're comfortable with what they're getting themselves into.
So is it basically a conglomerate or a fund that's saying, hey, we want to insure this type of product?
Yeah.
And they pull together the money and then provide that insurance package.
Yeah.
And they are, okay, that's interesting.
They know they have experience. Their numbers say I can do well insuring this property for this amount.
Right.
But if it goes outside my comfort level, I'm not going to let them in my little protected group.
Right.
And so on the flip side of that, while we don't offer that policy, we do offer the ability with most of our investment properties where you can put them all on one policy.
Right.
Where, I've literally had somebody walk into the office and say, can you help me figure my bills out? And they've got boxes of statements from insurance companies on all these different properties.
Wow.
And they're like, and they're losing their mind because they need to be out buying properties or fixing sinks or something, right? And so
you're like, let's just be clear. You need a lot more help than just your bills, but let's start with that.
Let me refer you to this person. No, but like we can put them all on one policy,
right?
In
Simplify
many cases, right?
Yeah.
And so we have a schedule where we can put 20 policies on that one policy where you call me and say, hey Mickey, we're getting ready to sell 131 Main Street, but we're about to close on it today, so we'll take it off, but Friday we're going to add whatever Maple Street. And so it's real easy it's about the same amount of work for me, honestly, but it's a lot easier for record keeping for the investor.
Yeah. I mean, to a degree, it sounds similar type of a product. I mean, I'm sure that the way they structure it's slightly different, but same with it's just every day I learn something new. When I first started, I was like conventional loans. I could access that because I had a W-2. Then went on out on my own. Now I've had to learn the whole commercial banking space, and I've had to learn every little bit of nuances, and I continue to learn. Same with insurance. It's like I only had this one simple perspective of what insurance was, and now it's expanded to different opportunities and different potential, and that came from talking to people like yourself and saying, what is out there? This is the problem I have. How can you help me solve it? And so, and I keep on thinking about how insurance, this is just me. Insurance, to be honest, is one of the last things I think about when buying on a property and underwriting. When I underwrite, I'm kind of like, insurance is about probably X.
Yeah.
And like, I don't even call an agent, or I'm just like, we're probably about $1,000. We'll just keep running the numbers, and we're, but how interesting it is that it's another layer of cost. It is going to hit your bottom line, and having the relationship to be like, hey, can you run this for me real quick so I can get the numbers to, to quickly, because you could be on a differential between two different properties and think that and then, like I said, one's in a flood zone, you didn't do that research, or, different factors that involve like, oh, it's got a slate roof or a regular roof, or, I know brick siding versus, wood sidings are different insurables.
Right.
And if you don't know that, then you could just kind of fly blind, and I fly blind. And it's made me kind of like, this conversation is making me think through my processes so that I can do better underwriting,
On that note, flood insurance is it's a big part right now, and
Yeah.
and flood maps are changing, right?
Constantly. Yeah.
So a property that wasn't in a flood zone before could be now.
Yes.
But on the flip side of that, that's been paying flood insurance may be notified that they're no longer in a floodplain, and then it's
Right.
their choice to decide whether or not they want to keep it if they have a mortgage,
Right.
or whether or not they have a mortgage or not.
Right.
And so we do a lot right now of on the front end. Hey, tell me what this, like you called me, tell me what the flood insurance is going to be on this.
Yeah.
Just give me a ballpark so I'll know, so I can tell my buyer, or if I am the buyer, then I can kind of factor that in.
Yeah.
And then we started a couple of years ago doing private flood insurance. We for years it was the National Flood Programs underwritten by the government.
Okay.
And that was the only thing, that was the only type of flood insurance that was, this may be getting way off in the weeds, but that was the only type of flood insurance that was accepted by most lenders, especially the government-backed lenders.
Gotcha.
Now, there was legislation that passed that allowed private flood insurance to be accepted by most everybody.
Right.
And so that can be, I mean, this may be controversial to say, but you get the government into something that's probably going to be,
It's going to be run like the government run things.
right, exactly. And so a lot of time with, you said it, not me, but a lot of times you're going to be able to get a lower price if you go with that private flood insurance. And
Right.
it's still to me, a safe bet.
Yeah. Yeah.
And so when I say lower price, sometimes it's half.
Yeah.
And so we offer the private flood insurance as well. And, I salute what you're saying, in that what we really want to do is the things that we're not good at yet, let's get some help on that. Let's delegate that, and it's not just insurance. It's, it's the property management side for you guys. It's the, somebody that lives in California and they buy a house in Birmingham or Pleasant Grove or whatever. And they don't know they don't know anything about, they may not know enough about
the specifics
to make that decision, or to know if it's an ongoing good deal or not.
Yeah. No, that's so helpful. So, Mickey, this conversation has been incredible. I think it's funny because, I think a lot of people would maybe be like, "Oh, insurance! Do I really need to know that much? I'll just get it." Like you said, a lot of people, it's a checkbox. I've got a mortgage on this company. I have to have insurance. Let me get insurance and move on. And I think that those who take the time to listen to this episode are going to gain a wealth of knowledge. I mean, just that fact alone that Jeff Coe is going through transition and the underwriting, it sets me to say, okay, what does the next 2 to 3 years on my premiums look like? Because I've got to find more margin. Yeah. And just because my rents go up doesn't mean my cash flow goes up, because it could be eaten up by taxes, which have gone up on me, and by insurance.
Right.
And so, in addition to that, I must make my rents go up, because I have to offset, or literally a deal that was a deal a year ago will not be a deal anymore if I don't renew. A lot of people will say, "Oh, they're a good renter, and I haven't raised the rents on them in 5 years." Well, you're losing money then, because the world has raised the cost on you. You got to pass some of those, you maybe not all, but you got to pass some of that on to those who are, renting your place.
Right.
Or else you think you're sitting, like you said, on a deal, and you're actually losing money.
Could be, yeah.
And so anyway, I appreciate the time. We always like to say top 3. I'm gonna kind of lighten up. We've been diving deep on insurance. What are some of your favorite places to eat in this town?
Oh, that's our hobby.
I know, and we talked about that, and I was like, I'm asking you because I know that you enjoy getting out with your wife and you find some good food. So, what are some of your favorites?
My favorite restaurant in the city is Bright Star. In Bessemer. Is the oldest restaurant, and it's fantastic.
Is it like a meat and 3 basically, or is
lunch,
it a little more? Okay.
At lunch, but at dinner they serve everything. It's a Greek restaurant.
Okay.
Still family owned after all these years.
It's awesome.
It's amazing. Then we go to Mexican, which, I have several favorites.
All right, what's your top, top Mexican?
Probably my top favorite right now is Pablo's in the Colonnade. We love that. But I like all Mexican. So
yeah, I tell my wife I could eat it like 5 times a week.
Right.
Like, just give me some chips and queso.
Right. Queso solves a lot lot of problems, I mean, really. Put some queso out and some chips, and everybody's going to be kind of a little bit more chill.
Right.
So we have a lot of around my office. We have some of the classic places. We have Ming's Chinese. I've been going there for years. They're friends of ours and clients, and Pablo's is friend of ours and clients. We do. There's so many restaurants in Birmingham. You just couldn't go to them all.
Yeah,
right?
It's amazing. It's almost like where do you live, and then you just kind of populate the stuff locally.
Right.
Because you could be Hoover. I mean, I'm sure there's some gems in Hoover I don't know about because I live in Homewood. So, but I'll have to definitely check. I have not been to Bright Star, and I think we
need to go.
That's something that we need to do because I've heard about it and I've heard a lot about it, and. So I appreciate this time. How can people get a hold of you and reach out to you if they're interested in having a conversation about insurance?
Fantastic. Yeah. My cell is 205-492-3146. Or if you want where the real knowledge is, you can call the office at 205-490-6000. I'm always happy to help, and we do a lot of advising of people in your business on the insurance side, and people on realtors, lenders, small business owners. Do a lot of advising where they'll call and just ask advice on something. It may lead to something with me, and it may not, but it's fine.
Yeah.
And if I can't find the answer, then it's a challenge for me to reach out and find something else.
Man, I love that. Just constantly wanting to learn, help people. It's such a great attribute. I always say time is our most valuable asset, and I'm just so grateful that you would take your time and sit down with me and help other people learn about your field and hopefully help more people from it. And secondly, I'd like to thank you so much for being a part of our meetup, sponsoring it, believing in us and what we're doing there, helping others, be a part of the community. So it's huge, and just thank you so much for that as well.
You're very welcome. I enjoy going to the meetings. I learn something every single time.
Hopefully good stuff.
All good stuff.
All right, take it easy.
Thanks a lot.